What's going on, everybody? Welcome in, welcome in. It was good, Husky. Pretty solid day. Was kind of just posted up watching. Didn't end up making too many trades. Got a couple of shares of Shopify, but that was pretty much it. Um, yeah, smaller day in terms of new trades. I was watching Amazon for a little bit, but didn't really give me the opportunity that I was looking for, so decided to stay away on that one and give it a bit more time there. How about you? Didn't trade today. Oh, that's all good. Not missing out on too much, I'd assume. Unless you were watching, let's think what went nuclear today. Guess not much really moved today, huh? Kind of a slow day. To be expected, though. Going into NVIDIA earnings, you can only be looking for so much. Of course, we are right back to the highs. QQQ setting new all-time highs in the after hours. So definitely a nice report from them. I haven't had the chance to read it or listen to the call yet, but I heard that there was a split that they're planning now. So that's a pretty big deal. Yeah, it's another NVIDIA report. Yeah, NVIDIA. Yeah, the NVIDIA 10-to-1 split. Yeah, definitely an interesting one. It's not super shocking. First bottom trade was Starbucks. What'd you catch? Oh wow. What'd you hit it at? 72? Oh, not a bad spot to be grabbing it either. It definitely made sense. A lot of volume this week, especially today. Wow. Things really acting like it wants to fill this gap. Nice. That's a pretty sick one. That's a hard one to hit too. Dang. Very nice. Looks definitely nice over these highs, that's for sure. Nice trade there. I'm going to give it just a couple more minutes. Just going to give everybody else the chance to hop on in before we get going. Any questions or comments before we get started tonight? Nothing. Everybody's just ready to get this one going. Message. All right. Well, it's a couple minutes after the hour, so I don't want to keep everybody waiting for too long. A little bit of a thinner crowd than I would have expected tonight, but that's okay. I'm sure some will probably trickle in as we keep going. But in the interest of time, we might as well go ahead and get this one started. So I'm going to pull up the presentation. So I know Husky remembers. Just to give an introduction to the topic for the evening, I know the lecture says patterns, but at the beginning of this PowerPoint, I have a pretty detailed section on trends that I wanted to cover and kind of introduce the concept of market structure. This was an idea that we started to talk about a little bit in that lecture where I had to leave early that I know Husky was present for. But I wanted to just kind of really close out that discussion officially because I know he started it and yeah, obviously didn't get to finish it. So yeah, that's really going to be the big idea of tonight. We're going to talk through trends, different ways to identify them. Yeah, so that said, let's get right into it. So a lot of you should probably know by now, we have been moving through the beginner's course series. We're real close to the end here. We kind of had to jump around a little bit as a result of weird scheduling things that were mostly my fault. But that said, close to the end here. Excuse me. I think really the only lecture that we have left is lecture 11 here, price targets and positioning, which we haven't really covered in too much detail yet. But at this point, the beginner's course series, or this iteration of it, is getting pretty close to coming to a close here. As a reminder to those of you who haven't been present, big idea behind this course series is to develop successful traders who can find and execute on the highest probability trades. And in addition to that, they can also act on these opportunities with confidence. And the whole idea behind that goal is these lectures should give you the background information you need to understand to analyze charts through a technical lens. And as we progress throughout this course series, you really kind of see all those concepts begin to come together. We talk through how to form trade ideas and use that analysis that you're able to perform to actually execute on different trades. So that's really the big idea of this class. Again, this is almost nearing the end here, probably 1 or 2 more weeks left. All the prior lectures have been recorded and posted and uploaded and all that good stuff. So if you're interested, you can definitely go check those out in the latest classes tab. They're all somewhere in there. That's really the big idea. Let's keep this one going. I always like to mention, I know not all of you are new to these classes, but I like to treat like there's a new person in class as much as possible. Just a few notes before we get started. A lot of my lectures are reasonably fast paced. I do my best to talk slow because I get to the point where I really start to rapid fire. So do my best to slow down. A lot of the ways my lectures work is we start with generally easier concepts and we build on them as we progress throughout the session. That's going to be something that I aim to replicate in this class as well tonight. So if you have any questions or comments or concerns, make sure you ask them because the content really should only get harder from what we first start talking about. So definitely make sure you ask those questions. If by any chance I miss your question in the chat, go ahead and just post it again. Definitely it's possible for me to miss them from time to time. So feel free to ping a couple times if you think that I missed it. That said, I think probably good to get started here. Let's keep this one going. As I mentioned today, we're going to cover just kind of the basics of trends, and then we're going to move over to the charts to talk about a little bit more. I'll call it different ways to identify trends. We'll go through a couple of different examples and ways identifying trends can really help trades go in your favor more often. So yeah, let's keep this one going. All right, so starting with the fundamentals of trends, really going back to the basics here. Some of you may not have heard this concept before, but really trying to take it all the way back. First thing that you need to know is that the kind of definition of a trend is a fundamental piece of the structure of price. And that's one really complicated way of me saying that an uptrend consists of higher highs and higher lows. And before I highlight those higher highs and higher lows, it's important to note that this is a daily time frame. So each one of these candlesticks represents 1 day of price action. You can perform this type of analysis on any time frame chart. So yeah, anyway, yeah. So highlighting the higher highs here first. Way to identify these is essentially looking at a prior high on the chart and referencing if essentially the subsequent high is higher than the prior one. So I know that sounds pretty rudimentary, but that's really the practice here. So if we use this first high here as an example, call it the initial swing high, the following highs created, and when I say highs, really what I'm referring to is a place where price pivoted in the past and moved off of that high. So I can even probably just move over to the charts really quick and do some quick annotations. So let's take probably NVIDIA as a really easy example. And if I go here, 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 and here. A similar example here on NVIDIA would be something like, this is almost too much information. Let's go back to the daily here. So similar kind of idea behind the higher highs and higher lows. I'll just zoom in over here. Here would be kind of that first initial high that we might use as a reference. A higher low would be that first bottom that we put in after creating that high. So just zooming in a bit so we can see a bit more clearly here. The next higher high would again be the next significant place that we moved higher and then reversed later. So what I mean by that, essentially the higher highs, just to simplify things, are price structures such as this, where if simplified, these would be our highs, where price moved higher and then pivoted lower, essentially. Then kind of following up on that discussion, if we clean this up, mark out, say, an initial high here and an initial low here. The next higher high might be something like this high here, where we pivoted off these highs. Next higher low might be here, kind of the next significant low at the moving averages. Here might be another higher high, another higher low, higher high, higher low, higher high, higher low, higher high, higher low. So really what we're doing here is just identifying the structure of price and where it has pivoted in the past. So another way to kind of simplify this, you could just kind of visualize this like a singular line. So let me remove all the studies real quick so it's even clearer. So you could draw something like this. And this is just really to help us visualize the trend here, right? So this is just making things incredibly simple, really starting from the basics here. And this would be another example of higher highs and higher lows, because every time we move into the highs, then move into the lows, we are essentially making more progress to the upside. One important point to realize as we move throughout this lecture is the stock market and trading in any individual equities is a constant battle between both buyers and sellers. And this is one way of realizing or understanding that buyers are in control of a given equity. And what I mean by that is when buyers are in control, it essentially means that buyers are outpacing sellers. Another way to think of that is demand is outpacing supply. More people are looking to purchase a given instrument than the people that are looking to sell it. And as a result, we're getting price action that results in net appreciation or increase in stock price. So a lot of different ways to explain that. Hopefully, at least one of those examples resonated with you. Before I move on past that concept, do we have any questions on this idea of the higher highs and higher lows? Again, that example is reasonably arbitrary, and I'll admit this isn't a kind of thing that you'll be doing very frequently. Like, for example, I wouldn't expect most people to be going and drawing lines on the chart like this, or going and marking out ovals with all the higher highs and higher lows, right? That wouldn't be a very common behavior. Really, the big idea behind understanding this is understanding when the structure of price changes. So, for example, the most important time to be really making sure of what's going on with higher highs and higher lows in the trend as a whole is here, for example, we're in a downtrend, right? We're setting lower highs and lower lows, right? Reasonably obvious to see here. Again, just marking them out with the ovals. So it's clear, lower highs and lower lows. When we really want to start paying attention is when that trend stops continuing. So here we set another lower high. However, here, oops, I'll draw just a box around it. Here, we set our first higher low, right? Previously, we were setting lower lows. Now, all of a sudden, we begin to set higher lows. And this is where you should begin to think, seems like something is changing here, right? So this is the most important types of places to be paying attention to the structure of price is ultimately when that structure begins to change, right? Because essentially what that represents is the tide of, call it control in any individual equity has begun to shift in the favor of another party. So prior to this higher low, sellers were in full control. Once we set this higher low, it starts to seem like now sellers are no longer really in control. We're starting to see those buyers take over as they set a higher low, then a higher high, another higher low, et cetera, et cetera, et cetera. Does that make sense to everybody at a high level? Any questions or concerns before we keep going? No questions, no comments. Everybody's feeling happy and fully understands what we covered so far. Clear for a smiley face. All right. All right, let's keep it going. This is more of the basics. So ideally, we don't spend too much time on it, but if the questions come up, happy to clarify. All right, another kind of way to visualize a trend. So previously we talked about kind of the structure of price. Now we're kind of referring to a way to visualize the trend as just a line, a trend line, right? And this is something that we see River posting in this tab time and time again. He's always talking about trends. So he's always got some really good examples of this live day in and day out. But another way to think about trends, previously we covered those higher highs and higher lows. You could also think of just a support line supporting price. So going back to the chart here, you could maybe draw just an uptrend line. That doesn't quite work. Norman likes vertical lines. Of course you do. Yeah, NVIDIA, a little bit almost too vertical for something like this. I think Shop is a decent one. So just look at this on the weekly. Here you can kind of see how this has been a little bit of a change in character, right? We have this uptrend line acting as support. Oh, VRT might be decent. Gave you all these entries, Norman. You didn't take any one of them. Yeah, VRT is a bit messy, honestly, Norman. It's got these weird gaps that just get bought up, but I mean, you could do like a short-term one right there. That kind of works. But anyway, big idea is that this is just another way to identify the current trend, right? And also these trend lines act as support and resistance. Generally speaking, at least in terms of how I usually, excuse me, give me one sec. God damn, can't stop coughing. All right. So this is just another way to identify trends. Generally speaking, what I was saying is that I don't typically use uptrend lines as support unless it's a really long time frame. I find that using trend lines as support is generally more significant on the higher time frames. Actually, how I usually like to use trend lines is draw them out as resistance on the lower time frames. So, for example, on something like Amazon, it's kind of how I have that drawn out, where this trend line is generally acting as resistance right here, here, a little bit of an overshoot here. It was acting as support throughout today and ultimately failed that breakout. So that's just kind of another example of how I like to use those trends. We got a question from JS. How do you trade this when you don't know when the next higher low is, for example? Yeah, so it's a very interesting question, right? Obviously, identifying those higher lows is something that you generally have to do, not necessarily in real time, right? So, really, the significance behind identifying higher lows and lower highs or a trend reversal in general is looking for long-term or call it major trend reversals. So, for example, I'm going to refer back to something the exact same way that I use this system a long time ago, which was essentially SPY was in a downtrend for all of 2022, right? Lower highs, lower lows throughout the entire year, right? Very clear to see lower highs, lower lows. Here we did set a higher high, so maybe time to start thinking about a potential reversal. However, then we came and set a lower low. Here, however, we set our first higher low. And after this week completes, right after the close of this week, it's pretty evident that you can see a higher low has been put in. Then once again, we put in another higher low on the highest volume since January of 2022. So we put in the highest volume in about 13 or 12 months, which every time we see significant volume, that's always something to be mindful of. And even if you weren't bullish after that, right, once you see us break this short-term trend after another higher low, there's really no reason to be bearish after something like this. And obviously, you're 100 points off the low here, but still, right, this is essentially a reason to realize that this is not something that is only done in hindsight. And I could even probably go back to some of my posts at the time and just show you what things look like at the time. Let me go and try and find something here. If we look before, call it April 1st in the tab. Let's see here. Try and find something good here for us. All right. So here's a post that I made on March 26th, 2023. And this is not really to just toot my own horn and show you how right I was, but rather this is meant to show you that this type of analysis is certainly possible in real time. And it's especially useful for identifying long-term reversals. So here I mentioned a couple different, key levels to be paying attention to. And one of the more important things that I mentioned is the weekly time frame is starting to shape up with higher highs and higher lows. And when you look at this chart, you can see exactly what we're talking about right now. And if I just open this up more clearly, you can see our initial low at 360, our higher low here, another higher low, and a higher high relative to the prior high here. So these are all things that can be done in real time. It's not something that is only done in hindsight, and it's something that you should be paying attention to. And also is part of the benefit of spending time at least once a week to review these larger time frame charts so you understand the big picture, right? Without having this larger term context, you would have no idea that the market is shaping up for a longer term reversal, right? Which is exactly what was happening down here. We set this massive low right around the 350 area on the S&P. Then we set two higher lows at 380, and we never saw these prices again. These are the same higher lows depicted in that screenshot. So point of going back to that old message is essentially to show you, JS, that this is something that you should be able to do in real time, right? It's not like you're looking at this specific week and saying, ooh, this is a higher low. But once you look at a weekly chart and you start to see these higher lows begin to develop, it's a more concrete sign that's saying, hey, something is really starting to change here, right? It's starting to become pretty evident that it seems like buyers are really changing pace with these new price action closes. So that's really the big idea to get across. Does that make sense to you, JS? And obviously, we're not really dealing with many long-term reversals at this point in time. The bear market has bottomed. We've obviously moved significantly higher off of those bear market lows. However, if we were to come and set a lower high, for example, like we come here, maybe set a lower low, then a lower high, that would be a red flag, right? That would be a reason to start thinking about maybe a potential longer term reversal to the downside. All right, good question. Cool. So moving on then to the presentation. Thanks, Norvin. Appreciate that. All right. So as we've already kind of discussed, while an uptrend consists of higher highs and higher lows, a downtrend consists of the exact opposite. So lower highs and lower lows, exact same concept. It's just opposite, right? So for some, a little bit more counterintuitive to think of things in the downtrend context, but really it's just the exact opposite, right? The uptrend has higher highs and higher lows. Downtrend has lower highs and lower lows. And similarly to the uptrend, you can also draw this kind of resistance trend line similar to the support trend line there. Cool. So that's really brings us to the end of the PowerPoint content for this lecture. Does anybody have any kind of other questions or comments on that, or does that overall basics covered to everybody before we start to talk a little bit about things like confluence and some other ways to identify longer term trend reversals. And then we'll talk a little bit about the significance of understanding the trend. That way everybody understands how to make some really, really high probability trades, or I shouldn't say really, really, but higher probability trades based on the direction of the trend. Everybody good? Ready to keep rolling? All right. Let's keep this one going. So last point that I wanted to cover is something that I've been trying to be a little bit more intentional about recently, which is using the shorter term moving averages as another kind of confluent indicator of trend. And I have this EMA Cloud study, which really helps kind of identify that, which is posted in my tab recently. So if you want it, it's somewhere in here, somewhere. here. I'll post a link to the message in the chat. So if anybody is interested, the study is there for you to reference on your own time. But big idea of highlighting this is essentially to show the significance of paying attention to some of these longer term, or not longer term, but shorter term EMAs to reference or understand better what the short term direction of the trend is. And you can see kind of clearly just over the past 10 years, right, looking at the weekly chart on the SPY here, it's pretty evident that generally speaking, when this EMA set of EMAs is in a positive trend, it seems like the market, in addition, was also positively trending. And when these EMAs were in a negative trend, which is denoted by the color red, generally speaking, the market was trending to the downside. And you might be wondering, well, why should I care about that? The big idea is that the trend of the market heavily influences the probability of us being correct on any given trade. What I mean by that is when the higher time frames are trending to the upside, it's going to make trading to the upside or trading calls or trading long or purchasing shares much easier, generally speaking, because you're trading with the overall trend of the rest of the market, right? So you already have the wind at your back, so to speak, and have that extra probability in your favor. So it's really important for me to highlight that, especially because over the past couple years, it's been pretty obvious that when the trend was up all through 2020 to 22, it was pretty damn easy to be long and stay long. And similarly, from the effectively the beginning of 2023 all the way until now, it's been a whole lot easier to be long rather than short. And this is kind of a concept that I think some people have a little bit of difficulty grasping, but it is really important to understand that when the overall trend of the market is up, it's a lot easier for you to get long and have a little bit of time on your side because the rest of the market is moving in the same direction. And as a result, a rising tide carries all boats. And that just adds a little bit of extra probability in your favor to be right. And as you may or may not know at this point in time, trading in the stock market is all a game of probabilities. And when we're trading, all we're looking for is extra little reasons for us to be correct. So if we can go to these higher time frames and identify things like a reversal in progress, right? A couple different higher lows. If we can identify things like the EMAs flipping in a positive trend, right? The 10 EMA over the 20 EMA is certainly a positive indication here. Those are two things that we can easily identify that are really valid reasons for a trade to work in our favor. Now, talking about this in a little bit of a different context, I want to pull up a graphic really quick that I really love, that I've shown a lot in lecture recently, which kind of illustrates this concept in an even simpler manner. So just give me one quick second. That quality of that image is really bad. So let me find a better one. That's also a terrible quality. We'll just work off the bad quality. So the big idea is essentially, this is a graphic from Oliver Kell. He's, I think, a little bit of a younger trader, implements a lot of concepts from some of the more older legendary traders. Yeah, so I really like his stuff, and this is just a graphic that I love referencing. Also recommend the book that he has. I think it's a pretty good book. Anyway, he likes to use the 10 and 20 EMAs for this longer term time frame analysis. And I also think that that's a completely reasonable set of EMAs to use. A lot of people around here, you'll hear them talk about maybe the 9 and 21 EMA. The 10 and 20 are so close to both of those that honestly, it's not really much of a difference in my mind and still completely gets the job done. Regardless, big idea behind this kind of cycle or market cycle graphic here is it essentially represents the different types of setups that are common to see when we're at these different phases of a trend. And obviously this is incredibly simplified, but I think it's a really nice framework to have in the back of your mind when you're looking at a chart, because it really helps you understand where are we at in any given cycle. Are we closer to the bottom where we recently got this 10 EMA crossing over the 20, or are we closer to the top where we have a high volume extension away from the moving averages? So just kind of talking about what that might look like on the SPY here. keeping this in mind, let me just clean this up a little bit and see if I can bring this as a reference. Let me do some window resizing. Cool. That'll probably work for now. Come on. All right. So just comparing this graphic to this chart here, I think it's pretty obvious that this was obviously the low here. So this would be kind of that reversal extension spot. So I'll just annotate that. Next up, we really want to start to look for the first place where we started to pop above the EMAs, which he's termed it a wedge pop, which I don't know, no, not my favorite term, which really that started to happen somewhere around here. So this was kind of the first move over the EMAs, which would be kind of that wedge pop. So I'll annotate that here. Next up, we have the EMA crossback, which is that first consolidation into a positively trending group of the 10 and 20 moving averages, which that looks like happened right around here. Maybe even you could say that this is the wedge pop because this is where we got that high volume, and this would be the first crossback. So I'll just annotate that here. And then what we're really looking for is different consolidation into the moving averages. So this would be kind of one of those. Here we broke down, which make things a bit more difficult in terms of the higher time frames. So let's just zoom into the daily a little bit and make it maybe a bit cleaner, just for the purposes of this example. All right. So again, here you could see similarly that first or biggest extension away from the moving averages, which is generally denoted by high volume, which you could see a lot of high volume as we moved lower this time around. Then we popped back above the moving averages with some significant strength, leaving multiple gaps behind, which is definitely a good sign in terms of bullish strength. So this would probably be kind of a wedge pop, but also hard to say. It seems like we kind of skipped that phase this time around. This section right here is definitely pretty clearly the first EMA crossback, right? We have the EMAs trending in a positive direction. We have that first touch of the 10 EMA, which held as support. So this would be kind of that first EMA crossback. Next up, we have a nice base forming right at the moving averages. Pretty nice. So there would be your first base and break. And then really we didn't have too much consolidation after that, right? At that point, it was really just kind of riding the moving averages higher, right? Every bounce into this set of EMAs was bought, which is almost living proof that over the past couple months, and I think I'd like to think that we've advertised this reasonably well. Being long has been one of the easiest trades because very clearly, every time we move back in this set of EMAs, buyers step in every single time. And that's denoted by expressly high volume every time we move into these moving averages, indicating the interest of buyers every single time. So this isn't necessarily meant to be kind of an exact replica of this market cycle graphic, but rather hopefully this serves as a little bit of a framework to help you reference when you're trying to figure out where we're at in a trend. And also all of the kind of ideas outlined in this graphic are very tradable setups and very important things to be looking for. And there's a lot more detail that he provides in the book. I'll see if I can maybe find one example online. Just this is an example here. Let's see if he's got something good. Let's see here. Yeah, nothing too amazing, at least in terms of annotation. But one interesting post that I guess we could highlight here is actually something pretty similar to what we recently talked about, where this is, I think, one of his charts identifying very similar behavior that we talked about in the SPY, where it's important to take notice of those initial higher lows, right? That's what I like to refer to as a change in character. The stock is beginning to behave differently, and as a result, we should really start to pay attention, right? Those first higher lows are very critical and really certainly something to be paying attention to. So anyway, that's a little bit of my spiel on kind of how to use these EMAs and how to understand where we're at in a trend. We got a couple questions from Norman here. Give me 1 second. All right. So best advice when the trend is clearly up or down and not getting smoked. If the trend is over the EMAs, it's bullish. If it's under all the EMAs, bearish. Yeah, so that's generally the right idea, Norman. I think it's important to note that just because price is under the EMAs doesn't necessarily represent a bear trend. In short, the EMAs represent kind of a summarized direction of the trend. And you can see multiple times where we made it below the EMAs, and yet this was not a bear trend, right? We continued to move higher. So don't necessarily take it that lightly. I like to think, at least in terms of the EMAs, I like to think of an official kind of confirmed trend reversal once we see those EMAs cross. And not always is that going to work. Like, for example, here, we got those EMAs crossing to the downside, but no really long-term trend reversal here. And same thing here. We got the EMAs crossing to the upside, but no real long-term trend reversal here. So not always is this going to be, the end-all be-all indication of a full reversal. And that's an important note, right? There's no one-size-fits-all or no kind of one indicator or one line of thinking in the market that's always going to work. But definitely, this is a really, really powerful way to be thinking about the trend in markets and also to be analyzing just charts in general. Always, this is a great place to start your analysis. Is just figure out where we're at in the trend and what the trend is. Always should be the first step. In reversal, EMA clouds go green to red, happens after a few candles. How do you take the entry point? Yeah, so at least in terms of what we've been talking about tonight, the idea of understanding or at least identifying a trend reversal isn't about catching the bottom, right? It's not necessarily about getting long right here and knowing that the trend is going to reverse, right? While that would be great, it's not necessarily the point. Rather, it's more closely focused with reacting to a change in trend once it is confirmed. So, for example, here, once we get this gap above this massive downtrend with the EMAs trending positively, there's really no reason to be short at this point in time. Definitely no reason to be bearish. So if you don't get long on this specific bar, you should absolutely only be looking for long entries from this point on. So you might look at the previous lower high and use that as a level to base a trade off of. You might wait for price to come back into the moving averages and use that spot as a place to base a trade off of. Regardless, though, the idea is not necessarily to catch the bottom. And even catching a trade on something like this, I'll admit, is kind of difficult, right? For a longer term reversal, it'd be kind of difficult to say, yes, this is exactly where we should enter, right? I'm completely fine admitting that, yeah, entering here wouldn't be the easiest thing ever, right? And this was kind of a unique move off of the lows, right? We moved about $50 in something like 20 days. So reasonably quick move off the lows. It's not always the way things are going to happen. It's kind of the same idea here, though. Like we recently got a perfect example of this, where once these EMAs crossed to the downside over the past couple weeks, it's definitely been more difficult to trade to the long side. And once we got these EMAs crossed back over each other, definitely been more difficult to be trading short, right? And if we didn't get long instantly as these EMAs flip green, we could pay attention to some of our prior pivots, maybe here or maybe here, and get long as we trade above those and hold above those. So yeah, the idea when the trend reverses isn't to necessarily catch the dead bottom. It's more important to react to a more actionable setup after the trend reversal has occurred. Did that answer your question? That kind of makes sense? Awesome. Okay. That was a really good question, though. Any other questions on framing trade based on this type of idea? If not, I'll roll through a few examples on this, and then we'll go from there. Any other questions before we spend the rest of our time looking at some examples? Or is everybody good to go? everybody understand what we should be looking for? We'll roll through some specific examples on what to look for, but this is really the big idea. Yeah, good question. This EMA cloud is 10 and 20 EMAs, but if you prefer the 9 and 21, it's also fine. Yeah, this is just the 10 and 20. I mean, we could set it to the 9 and 21, and it'll look effectively the same. It's really no difference. Yeah, very good question, Husky. And I'll actually kind of walk you through how I think about this and how I was thinking about this even today. So let me get my other charts up. So essentially, just so you guys are aware, the way my kind of trading setup works is I have on one monitor, I have the SPY and the Qs, and I have a couple different time frames up of both to monitor the trend. And on the other monitor, I have, in this case, Apple and Amazon, and I'm essentially monitoring the trend here as well. So actually, one trade that I was looking to take today, but didn't, was Amazon. So I kind of want to walk through why I didn't take this trade, even though some of the signs that we would have been expecting were in our favor. So first and most kind of important thing to note here, Amazon, I'll even go over to the hourly here, probably even better. So Amazon today, or at least over the past few days, has been pretty much stuck in a downtrend, right? It hasn't been doing much good for itself. And as a result, I've been kind of waiting for it to have some kind of reason to reverse, as I think it should move higher. And taking a look at Amazon's daily chart here, we'll notice the trend is up. If we look at the weekly chart, the trend is up and also bouncing off the EMAs. And finally, yesterday, we had a really high volume buy day, right? We had a very significant amount of buyers step in yesterday. And we also had a similar or even greater amount of buyers step in just a few days earlier. So these volume patterns signify to me that buyers are interested in taking part or taking a position in this stock. We're also trading near a real key weekly level right around this 184 spot. So there's multiple different reasons that I'm interested in Amazon and looking for that long entry. So moving on to the shorter time frames, and even what I mentioned in my tab today. Today, I said pretty clearly, I said, looking for Amazon to, let's see somewhere. Yeah, interested to see the 184s hold. Yeah, that's all I'm really looking for is I want to look for the 184s to hold. If they do, I'd be thinking that there's a short-term bottom in. And by around 7 a.m., the 184s weren't really holding, so I wasn't super excited about it. So let's take a look at actually why I skipped out on this trade, because I think this might be a bit instructive. So if we take a look at how the market opened up today, at open, Amazon moved right through the 184s on kind of standard opening volume, right? Volume's always pretty high at the open, came back down and retested. And off the bat on the retest, there was not really any significant volume. As we came back down for the retest, volume dropped, which is generally a good sign. But what I would have expected here is on this first green bar, I was really looking for a bit more volume, like something like this, for example, with a real significant amount of buyers stepping in as we retest, which didn't happen. And generally speaking, this is another aspect of high probability trades, right? Number one, we want the trend to be in our favor. Ideally, you have multiple or all time frames, right? Which in this case were mostly true, right? Daily, weekly, 5-minute, even the hourly and 30-minute, we're flipping positive. So we have the trend in our favor on every time frame. But what I was really looking for is those buyers to be present, which they really weren't besides the open. And there's nothing notable about a lot of buying on the open, right? Especially something like this. Like if you scroll back to the prior day, there was just as much selling on the open. So not incredibly significant to me there. So that was kind of the reason that I held off on this trade, at least at the open. And you'll notice if we zoom in here on the hourly, the trend actually started to flip positive, right? So we had that positive trend starting to come through, but the problem was there was not really any high volume notifying us that buyers were really present, right? And in addition to that, this first hourly candle is not bullish, right? That long upside wick pinned below a key weekly level that's not a very good reason to get long. And even then, after a couple more hours, we still couldn't get above 184. So this is one example of pretty much every trend being in your favor, but you have to be paying attention to price action as well. And in this case, the price action wasn't really supporting the idea of getting long on a hold of the 184s, because if you look at the hourly, the higher time frames, we can't even hold above 184, right? Multiple bars getting stuffed at the 184 spot, no buyers showing up on the 5 minute. So as a result, I just held off on the trade, right? There's nothing really too exciting going on there, and I just decided to stay out. So that's kind of one example of when all the trends might be in your favor, but still all the pieces don't align, right? And this isn't to say that every setup needs to be perfect in order for us to take it, right? That's not the case. However, we definitely have more of an advantage when we have price in our favor and volume. That's kind of the biggest two things of any trade. In this case, price was in our favor, right? Things were going generally well, but we had no volume to support it. So in this case, it was one that I stayed away from. Next example that I want to run through is Tesla, which has been an excellent kind of case in point here, at least as of yesterday. Today, definitely a big retest, which is in complete Tesla fashion, but really want to highlight yesterday. I don't remember if I mentioned this in my tab. Probably not. I didn't actually trade it, but definitely was a really instructive move on it. So I want to talk through it. So Tesla is a really nice example of a shorter term trend reversal. And you should be able to pretty clearly identify here that this is definitely considered a reversal extension per our previous market cycle graphic, right? A significant extension from the EMAs. Then we pop right back through them almost. I think this is like a 40% gain in 6 trading days, right? That's a massive move. So clearly some momentum here to the upside, clearly some buyers present. Then with EMAs flip positive, we come back down and retest them on no notable volume, which is exactly what you want to see when price consolidates, right? When we see that trend reversal, which we did here, right? Definitely a big trend reversal, EMAs flipping positive. Once we get that consolidation, we don't want to see any significant high volume, right? Like for example, if on this day we saw really massive volume, you just make a crazy example here and add that. So if for some reason on this day we saw just gigantic volume, that wouldn't be the best sign, right? Because that indicates that, there's still people who are really interested in trading. And generally speaking, when price consolidates, you want to see a lack of interest in trading, right? You want to see people just kind of sitting on their hands, waiting, maybe quietly accumulating positions, not these big, massive volume spikes, especially opposite the direction that you're looking for. In the case of Tesla, we did not have that. Sorry about that. No idea why I've been coughing tonight, but it's really annoying. And of course, it only comes up in lecture, which, I want to try and not continue to cough in the mic. So I'm sure it's loud and annoying. Anyway, in the case of Tesla, right, there was no notable volume as we consolidated. What that is a positive sign, right? EMAs are positive on the daily. We have the 10 above the 20. Notably, there's still a downtrend on the weekly, so there's still definitely some elevated risk to this one. But Tesla being Tesla, I think the risk was reasonably acceptable. Now I want to zoom all the way into the 5-minute on this one. So starting off in the day, we got a real nice move off the open, and I just want to remove pre-market really quick so we can compare to the prior days. Let's do that really quick. So real nice move off the open, and notably, it's actually on higher volume than other opens, which is something that I like to compare, like how much volume actually came through off the open, which on Friday, Monday, today we had some pretty high volume, and Thursday, the past 3 days, volume at the open was lower than we got yesterday, right? So that's a notable sign, right? Again, every time we're looking to take a trade, we need volume to validate price. Pretty simple. So for me personally, the level that I was really paying attention to was 180. And just to show you kind of why, 180 was pretty clearly defined as the most important pivot right around here, right? Big selling stepping in on these 2 spots there. So 180 was the place to be. So intraday, right, we got a really nice consolidation through 180, right? Pretty nice consolidation. And then all of a sudden, we get massive volume as we break through 180. which this is an example of a very, very high quality breakout slash trend reversal setup, right? We have the 5 minute very clearly trending to the upside. We have massive volume as we clear through a key pivot. This is oh, that really just scared me. This is a really, really nice time to begin thinking about getting long if you haven't already. So we got the breakout intraday confirmed by heavy, heavy volume. If you didn't get long on the break, which is completely understandable, this was a real quick move. As we come back to the EMAs, which are still trending in your direction, it's a great time to be considering long. And I mean, yeah, if you didn't there, you still got more opportunities throughout the day to get in. And this just goes to show, right? When the trend is in your favor, buying at support is much lower risk than when the trend isn't in your favor, right? Because you already have buyers that are backing the trend, buyers that are actively participating in the trend. And as a result, when you look to enter on these areas of value, which could be the 5 minute intraday moving averages, even the 30-minute moving averages could act as places of value. In this case, we moved so far so quick that we didn't even have the chance to get there. But the 15-minute moving averages, right? You're looking for those entries at the trending EMAs. Regardless of that, Tesla is a great example of a setup that worked really nicely, right? We have that confluent trend reversal forming on the daily chart, right? Again, big volume indicating that buyers are in control in the short term, right? You cannot deny we have, I mean, if we even zoom out, right? There's no denying that this volume is massive, right? The last time we got buying volume like we did here was on another earnings report. So we've gotten volume this high twice in the last 3 years. That should be a alarm bell going off in your head, right? When you see that heavy a volume come in and we've only gotten it once before in the last 3 years, it's an anomaly, right? It's a reason to pay very close attention to what happens next. So everybody should have been paying attention to Tesla, at least in some form. And obviously, if not, now you know when it's time to start watching more carefully. Anyway, right, we got that big volume push through the EMAs, then consolidated on top of the EMAs for plenty of days. Really kind of nothing to do here. You could grab them at support, but honestly, with something like Tesla, that's still in a downtrend on the higher time frames. For me personally, it was a little bit better to just kind of wait this one out a bit, give it some time. And then finally, right, identifying that key pivot at 180, right? So real important pivot there, significant sell triggered there a couple days in a row. And on the 5 minute, when we blast through that 180 level on high volume, at this point, there's really no reason to be short anymore, which means you should probably be long. And we got a couple real nice entries riding up the EMAs here, which just signify how easy it can be to trade when you have these confluent trends, essentially, is all this is really about, right? And even taking it back to our original example, right? We have very clear higher highs, higher lows intraday, even on the hourly here, right? This would be our first higher high as we close above 180, right? So now we have a potential trend reversal. We had some higher lows coming into this level, so already another potential trend reversal. So a lot of reasons to be looking to the long side. It's just a matter of if you caught this one. And if not, right, there's definitely going to be plenty more opportunities to trade setups like this. These types of things show up all the time. This is not a unique setup to Tesla in any way. So, yeah, that's kind of two examples on trading with the trend. Let's see, we got Husky. So higher volume, more buyers, and lesser volume, more sellers. No, so that's not the case. Higher volume could be either buyers or sellers. It depends on how the day closes. So, for example, if the open is essentially less than the close price, so if the price increased throughout the day, this volume bar is painted green, which generally means that buyers outpace sellers in that day. So high volume could represent either buyers or sellers. In this case, it represented buyers. Does that make sense? And also, it can be a little deceiving. Like on this day, Tesla gapped up almost 10%, yet the volume bar was actually red. But you have to realize that price moved 10% higher. So while the volume bar is red, technically these are buyers because we increased by 10%, or buyers are in control here. Any other questions about trends? If we don't have any questions about trends, I'm going to look at Norvin's new list of stocks, which I've actually never seen any of these tickers before. So he's got something new for us, which is impressive. How are we feeling about this? I mean, is this something that you guys feel like is something reasonable to implement in your trading? I personally think this helps. This has helped me really kind of dial in the quality of setups that I'm taking. Because now I'm not really trying to trade anything long unless I have that higher time frame trend in my direction. And additionally, I have, we're coming into some strong support, right? And I mean, it's as simple as that, right? You identify what direction the trend is in the higher time frames, then you look to position yourself at key support on the lower time frames. It's really that's the kind of simplicity of the idea. Obviously, there's more, things to consider once you actually are executing, but that's really the big idea. Questions, comments, concerns. I haven't seen many charts in my DMs, and I'd like to see more. So if you guys have questions on charts, please go ahead and send them over. We'll talk through them together. I really wish I saw more charts in my DMs. I want to see more. If there's no comments or questions, we're going to go through Norvin stocks, and I guarantee nobody wants to see me talk about Norvin stocks with them. Did we cover everything you wanted, Husky? I know you were probably bummed that we didn't finish this last time out. Ooh, Marvell. I'm sure that one's gapping up pretty heavy overnight. Good targets for tomorrow. Yeah, I mean, this 74 spot is the one to be paying attention to. In terms of a significant target, I mean, really, it's this pivot right here, which the Zoom window's covering. I don't know what the price of this is, 76. I think that's pretty reasonable spot, but yeah, pretty big gap up into tomorrow. Let's see. I mean, there's really a lot of room if it gets through 76. I'd say the next spot above that is 80. But yeah, it looks like 76 is coming into play tomorrow. Apple, yeah, that one's been on a heater recently. It's actually been very impressive. The hold above 190 is important. Volume definitely starting to dry up a little bit. It is only Wednesday, but it's starting to dry up. It's gone real far, real quick. This is a big move for Apple. For me, it's not the place I'd be getting long. I'd be waiting for this to set up again. I don't really have a trade that I could take on this right now just because it's still extended. But I mean, it looks like it's going to go higher. It's just I don't feel like, or not. It's not really a feeling. It's factually, this is not really at a spot where I'm interested. Right? It's extended from the moving averages. It hasn't set up in a base. There's no actionable trade for me here. So it's something that I'd probably just hold off from personally. However, looks like it wants to go higher so long as it continues to hold above this 190 spot. Enphase, yeah, solar had a pretty nice day today. I was looking at the solar sector as a whole, which might be more important to cover. TAN is the kind of solar ETF. This one with a massive breakout today. Honestly, the solar sector likely wants higher. This might be a longer-term bottom as well, especially with this type of volume. It's a similar idea to Tesla where you don't see this type of volume coming often. When you do, you should be watching. It's got this volume gap above 45.22 up to the 48 spot. 48 is a reasonable target, but I don't know if it'll come tomorrow. I would assume this thing probably cools off for a little bit just because it's solar. But moving on to Enphase, similar idea, right? You could draw this resistance trend here. It's sitting right at that. Taking a look at the weekly, trend is still down, but definitely consolidating down here. If we even zoom out a bit more, let's see if we actually pull this up. Yeah, key level right above 124.50. At this point, I wouldn't be long until it clears that on a weekly close. But above that, definitely pretty clear skies all the way up to the 150s and 160s. So it looks like it could be potentially forming a bottom here. Another good sign is there's been a lot of accumulation volume as we've consolidated. So a couple real massive buying weeks. Also a lot of sequential higher lows here. So this one looks pretty damn close to being bottomed. If it can get a weekly close above the 124, I think logical next target is around 140. And then really it brings you up to 160s. 158 probably being a psychological level in the middle. But Enphase actually looks pretty good. I wouldn't long it right here, especially after a 9% day on something that probably has an ATR of like 0.5% or 1%. Let's see. Enphase. Okay. I mean, the implied move right now is $5, so that's still pretty heavy. So it's got about a 4% weekly range if expected by the market. So that's pretty heavy, but at least heavier than what I thought. But I guess that kind of makes sense. Yeah, that's what about it's been doing. Anyway, it actually looks pretty good. I'd want to see it close 124.50 or close above 124.50, but I actually don't hate it. So I'm gonna just set the alert there and see if we get it. All right, let's pull up Norvin's names. FTAI. Well, it's got AI in the name, Norvin, so that's a good start. Oh yeah, we probably pulled this one up before, dude. I got nothing on this. I mean, it's yeah. I mean, this one seems like we're a little late to this one. I mean, this is a kind of pivot to be watching out for. This is a pivot to be watching out for here, but that's, I mean, it's not set up right now. You could get long on the retest of 80, Norman, if you want, but that's it for me. RVMD. Come on, weekly. Yeah, I mean, just broke all-time highs and holding above, so that's significant. If you wanted to long it, it looks like you could do that through the 40 buck area. I'd probably get long above there. Let's write this one down. I got to track everything we get you to do, Norman. FTAI. Let's see. Got to make sure we know what you didn't hit, Norman. All right. NXT. Oh my God. Uh, um, yeah, this one's a little bit more of a difficult one, Norman. Honestly, probably would long on a retest of 50. Yeah. Outside of that, I don't really have much. VST. This looks okay. Wow. Look at that volume. I mean, this thing's going parabolic, so you have to realize that this is a parabolic advance, but little trend here. Belong it above that trend. Probably what I do. Wow, that volume is crazy. That's insane the day before earnings. That's like historic. Wow. Yeah, probably just long it above that trend, honestly, Norman. But I've heard of this one. Beef. Yeah, this one's probably just a pump and dump. Um, let's see if I can see the actual price here. I mean, honestly, if it comes back down to one, you could maybe buy some and take the risk of knowing that. Oh, it did come back down to one today. Yeah, I mean, the dollar seems like a good spot to try it if you can accept the risk of, this stock was 4 cents 3 weeks ago, and it could go back there. APP, yeah, I saw that one a couple of days ago. Oh, wow, it broke down. Interesting. Well, it came right into this pivot here. Yeah, the volume patterns were looking pretty good, but I don't like to see that expansion in volume. But this is kind of the line in the sand here. It's got to hold here. If it can hold this 80 buck area, I think it still looks okay long. Probably could take it above that trend. Might be a bit extended though. Might not be a bad idea to see if it can come down for that gap though. But APP looks okay. The breakdown definitely kind of ruined it. I think the most interesting setup would be taking that inside day break to the upside, but that didn't come. Hut. Honestly, this is kind of a crappy Bitcoin miner though, Norman, isn't it? Like they're not doing so hot. I'd focus on a more good one, I guess. But I mean, you could take that break above the trend. I mean, this is a bit messy, but oh, draw my trend to be something like that. I mean, you could long it above there. Oh, $10. Here you go. Perfect. Yeah, I mean, you could give it a shot long above 10. Wouldn't be bad. Long it above 10 up to 10.60 and then 11 and then 12. Probably be how I'd trade that, Norbit. But that's a funky one. Not my favorite crypto miner. I like CLSK. That's a nice one. Oh wow, that had a terrible day. What happened? Wow, they hit 20. That's nuts. All right, everybody. Well, I appreciate your time this evening. Thanks for bearing with me as I can't stop coughing. Appreciate you guys all being here, and I'll see you all in the next one. Thanks again, all. Appreciate you guys. And send those charts over to me. You know where to find me. Adios. I feel fine. I'm just coughing. I don't know why I'm coughing. I'll be fine. Thank you, though. I appreciate that. All right. Bye, everybody. Have a great night.